The RBI released its annual report last week and underlined the risks emanating from the Russian invasion of Ukraine. The central bank also allocated 1.14 trillion rupees to the contingency fund meant for unexpected and unforeseen situations. This annual report also informed us that even as the number of bank frauds have increased, the value involved in these frauds has gone down. More importantly, it also revealed that while private banks saw a higher number of bank frauds, public sector banks contributed more to the value. The central bank also proposed a debt management strategy for a few states. Indian states had borrowed 7 trillion rupees from the debt market in FY22. While the RBI increased its contingency allocation, it reduced the payout to the central government, which shall further burden central government's finances. But more avenues are opening, ones which the PSBs certainly won't like. A report by Business Standard indicated that after a nudge by the government, Bank of Maharashtra agreed to pay a 5% dividend by dipping into its net worth. More are expected to follow suit. As per BS research, 8 out of 12 public sector banks have recommended a dividend amounting to 11,981 crore rupees for FY22. Talking about public sector banks, the biggest news of the week was the government fast-tracking the process of privatization of 2 public sector banks. The Financial Services Secretary said, and I quote, "Advance action on this is underway." In last year's budget, the government had recommended privatization of 2 public sector banks besides IDBI Bank. The government had listed the Introduction of Banking Companies, Acquisition and Transfer of Undertakings Act in winter session, but the bill was not tabled. Niti Aayog had reportedly suggested privatization of Central Bank of India and Indian Overseas Bank. Moving away from PSBs, private banks may not have recorded high net profits like PSBs, but their credit growth remained in double digits in 2021-22. The credit growth of private banks at 15.1% was almost double that of PSBs, which recorded a credit growth of 7.8% in FY22. Aggregate deposit growth reduced to 10.2% compared to 12.3% last year. The decline was registered both for PSBs and private banks.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.